Well, it can take a long time to earn enough money to purchase a big ticket item like a house or a car. But what if you do if saving is just not enough to get you to your desired goal? Peter Sashecki from Everything Financial joins us this morning with some advice. Good morning, Peter. Thanks for joining us.
Morning, Gary.
And we're just talking about the pace of inflation picked up in September to its highest level in years. You know, I imagine you get a lot of people coming to you and say, I just don't know how to do it. Like everything's going up in price. How do you save money?
Yeah, people are finding it tough these days. We're hearing it more and more in the news and everywhere that inflation, that big inflation thing is starting to bite away at your savings. And it does make it tougher and tougher because as inflation goes up, you have less money to spend. And inflation might be only in a few items, but it's enough of those key items that we buy all the time to really take a bite out of our savings. And you just don't seem to have any extra money at the end of the month.
Yeah, the cost of gas way up, of course, food going up. You have some strategies, though, Peter, that people can use, starting with, and this sounds like a no-brainer, but a reduction in spending. Just don't spend as much, but it helps.
Yeah, it's something very simple. What you need to do is look at your cash flow. Look at how much you spend every month. And you know me, I hate that B word known as budget. We don't like that word. But you do have to look at what you spend and where you spend it. And there are some things, we see it all the time, that people spend money on that they just don't need to spend money on, or they just throw money away. And a lot of that sometimes is $10 to $30 a day at the little coffee shops or things like that, because suddenly coffee costs like $8 for a drink because it's not a coffee anymore, and all the other things you do with it. So look at what you spend every day and see if there's things you can cut out. And sometimes that could be $400 to $500 a month. And that's significant to go towards your savings.
Yeah, I started using one of those apps, Peter, that really maps out. Every time I make an expenditure,
Absolutely.
I put it into the app, and it really gives you a sense of what you're spending your money on. It's a real eye-opener for me. The next piece of advice you have is to leverage strategies. What does that mean?
That's people who own their house or own their property or have a lot of equity, because the one thing is still interest rates are so good. And it's so cheap, really, to borrow money. Look at maybe borrowing money to invest. And with that one comes one of the next ones. We're going to talk about tax strategies and tax savings. But that borrowing money, if it's done right and if it's done with the right strategy, can make a significant difference. Just make sure you're not locked into anything that if interest rates change, inflation really starts to get crazy, you can get out of the leverage strategy. You never want to be locked into that type of strategy. You always want an exit strategy for your leverage strategy.
Okay, I guess that's something to talk to your
it's a lot
financial
more.
planner about. Let's talk about that thing you did bring up, tax savings. How do we specifically do that?
Well, that leverage strategy can give you tax deductions on the interest. If you're dealing with a portfolio management company, you get tax deductions on fees, which is really good because things you're going to spend money on anyways, why not get to write them off? And look at the right amount of RSPs. I know that season, we call it RSP season. You know, I hate that term because it's RSP season is really all year. But look at the right amount of RSPs to maximize your tax savings. But again, you said it earlier, talk to your registered financial planner, develop a strategy. How much do I need? But then don't just buy RSPs for the sake of buying RSPs. Look at the refund and doing something with that refund, whether it's more savings towards that big ticket item, paying down debt, whatever the case may be. Don't just take the tax savings and then all of a sudden it's not really savings because you just blew it on something you didn't really need to spend money on.
Right. Can we talk quickly about fees before we let you go, Peter? Is there a way to reduce the fees to help our investments accumulate faster?
Yeah, look at your investments, look at the fees, but also where you're saving your money. It could be a combination of both. Look at portfolio management companies who actively manage your money, which means they're really involved with it, and they charge way lower fees than some of the traditional investment choices, because more money in your pocket is more savings. But also look at where your money's invested, because maybe you're just in a simple savings account paying you 0.25% interest, where you could be in something paying you 3 or 4% interest. That will make a huge difference in your savings.
Gosh, every little bit counts, especially when you're saving up for something. Peter Sashecki from Everything Financial, thank you so much for joining us.
Thanks, Gary. Have a great day.
You too.